Hello everyone, Bryan here with your January market update video. My apologies for not having an official December video, but hey, it was the holidays, I got a little fat, and I got a little lazy too. This year, I plan on providing you with the same great content, but making the videos into two parts. The first part will cover the basic statistics and be less than 5 minutes, hopefully. Now, the second part will consist of commentary, current news topics, and a summary. This way, some people can just get the facts and move along, while others can still get the full experience that you've come to expect. So let's go ahead and get started. Today, we're going to compare the December sales to December of 2012. We'll quickly cover the notice of default activity. Then, we're going to discuss the current inventory levels and what they consist of. I'll quickly explain the new mortgage changes that just took effect and what it means for this month. Finally, I'm going to show how and why price reductions are about to finally impact our market. Okay, first up are the December sales numbers. We sold 2,253 homes last month. This compares to 2,841 homes sold in December of 2012. Simply put, resale home sales were down 21% last month. Obviously, not a good sign. Next are the notice of defaults. We look at the notice of defaults every month because this provides an illustration of the foreclosure activity and gives us foreshadowing into how many foreclosure properties we'll actually see listed in the future. Now, as you can see on the screen right now, since the new legislative foreclosure changes took effect in October, we've seen hardly any foreclosure activity. This was to be expected, so not much of a surprise there. Typically, foreclosure activity drops during the holidays. Now that it's a new year, it'll be interesting to see if the foreclosure activity actually increases. Now on to the inventory levels. While most of last year we saw monthly increases of 20%, as you can see now on the screen, we started slowing down in October to 10% increases. Then in November, we pretty much flattened out. For the first time since last spring, we finally decreased our inventory during the first week of December. Now, this was very unexpected since at the rate we were going, we could have easily hit 10,000 homes by now. Considering sales were down 24% last month, that illustrates a lack of demand. Now, if demand stays low, but inventory kept increasing, we could have had a very serious problem going into this year. Now, we still have a tremendous amount of overpriced inventory out there, but overall, the market seems to be very stable between supply and demand. Now, let's quickly break down this inventory. 16% of the inventory are short sales, 8% are foreclosures, and 75% of our inventory are traditional sales. So here's the bullet points though. Only 537 foreclosures are on the market right now, okay? With roughly 80,000 delinquent loans out there, that's like a drop in the bucket. We're seeing a higher ratio of short sales on the market now, and that's because when the inventory increases, people are much less likely to deal with a messy short sale when they can easily walk across the street and purchase the same home. I would expect the short sale inventory to continue to increase this year as a result. Well, that's it for part one. You can click here, there's somewhere there right now for part two, where I'll discuss the new lending changes and how it'll impact us for this month. From there, I'll show you a very popular subdivision in Summerlin where nobody can seem to sell their home. The example I'm going to show you serves as a metaphor for what could very realistically occur throughout the entire valley this next year. So if you have some time, please check it out and let me know what you think. As always, thank you again for watching. Please subscribe and have a fantastic January.